So let's have a look at learning objective number 4, the income statement. So last week we looked at a basic income statement, and you constructed a basic income statement through looking at revenues and deducting all expenses to give you a net profit. And this is required by the accounting standard AASB, which stands for the Australian Accounting Standards Board 101, which requires entities to report on their income statement. So last week we looked at it, as I just mentioned, in a very simple form: total revenues, total expenses, so subtract the expenses from revenues, and that gives you your net profit. Now, for many entities, specifically retailers, we would like a more detailed view on the performance of that entity. And this is where the multi-step statement comes in. So essentially in the multi-step statement, we sum up a number of items to give subtotals and an indication of where the performance or lack of performance is coming from. So if we go to the next slide, the first thing that we want to do in a multi-step statement for a retailer, so a retailer is an organization that sells inventory. So remember, as I said before, like Big W selling Mr. Potato Head. And what we want to do first is we want to work out the difference between our revenues and our costs of inventory, right? So this is what we call gross profit. Gross profit is basically your total sales revenue, that is from selling inventory items, minus what we call the cost of goods sold, which is the cost of all the inventory and bringing that inventory to a condition ready for sale. And I'll talk more about what that means shortly. But for now, if we have a look at Woolworths' income statement, so they call it here a consolidated statement of profit and loss. This is in their 2019 financial report. You can see there that they have revenue from sale of goods and services, incidentally, and they deduct the cost of sales, right? So you can see there that they have $17.442 billion in gross profits in the 2019 year. So essentially, when they deduct all the costs of selling pieces of inventory, which is the $42 billion there, from their sales revenue, they are left with 17.5 approximately $billion to cover all their other expenses associated with their operations, which for some of you is probably a surprise because you expected them to have a larger margin. Now, it's an indication that Coles and Woolworths and Aldi and IGA and other supermarkets operate in a very, very competitive market, which is why they don't have really, really high margins. Because once you take away all the other factors, all the other operating expenses and other items, they're left with $2.7 billion in profit for the period. So there it is. They started with revenues of nearly 60 billion. So that's quite tight. And that's why Woolworths is looking at which operations are performing well and which are not performing so well and whether they should restructure them. So entities like Big W, they are looking at closing a number of those stores because they are not performing so well. Okay, so after you determine your gross profit, we then look at profits before and after tax, right? So we want to deduct all our operating expenses, all our other expenses that aren't related to corporations, giving us a profit before tax, then look at the income tax expense, and they're giving us a baseline, which is called total comprehensive income, or what we've been referring to is the net profit figure. So how do you determine the cost of goods sold? Well, basically the cost of goods sold is all the costs associated with bringing the inventory to a place of sale, the cost of those inventory units, and bringing the inventory to a condition ready for sale. So when I went and bought this at Mitre 10, it was a fully assembled unit ready to go. So their cost of goods sold would have been equivalent to the cost to truck this product to their store, the cost of labor to take this out of the box and assemble all the parts together, and the cost of the unit that they paid the supplier. That is the cost of goods sold for this particular product.